All right, today we're deconstructing the latest quarterly report from cybersecurity giant CrowdStrike. Let's get into it. So that's the big question, right? How do you actually grade a company this big in just one 3-month stretch? Well, to figure that out, we're going to dive right into their latest report to see what the numbers, and more importantly, the strategy behind them can really tell us. So here's our game plan. We'll start with the big headline results, the report card, if you will. Then we'll dig into what's actually powering all that growth. After that, we'll peek under the hood at the financials. And finally, we'll look at what's next for them, the good and the potentially bad. Okay, let's kick things off with section 1. Let's get right to those top-line numbers that have everyone talking. First up, this number, $221.1 million. That's a record for them in what's called net new annual recurring revenue, or ARR. Think of this as the purest indicator of their current growth. It's all the new subscription business they signed in just this quarter. And yeah, it totally smashed expectations. And all that new business we just mentioned, it feeds right into this even bigger number, $4.66 billion. That is their total annual recurring revenue now. This shows you the sheer scale of their entire subscription base. And man, it highlights just how massive their revenue stream is. Plus, it's up a whopping 20% from this time last year. So you've got all this recurring revenue, but does it turn into actual cash? Oh yeah, it does. A record-breaking $283.6 million in free cash flow. This isn't just revenue on paper. This is the real deal. Cold, hard cash the business is generating. It's a huge sign of just how healthy and efficient this company really is. And just so we're all on the same page with ARR, the gym membership analogy is pretty much perfect. Imagine you own a gym. ARR is like taking a snapshot on one day and adding up the annual value of all your active memberships. It's the best way to see how much predictable cash you can expect to come in over the next year. Okay, so those numbers are obviously pretty impressive, but the billion-dollar question is how? What's the engine behind all this momentum? Let's get into section 2 and find out. So what's their secret sauce? Well, according to CrowdStrike, it really boils down to a couple of huge trends. First, the explosion of AI is making their AI-native security platform an absolute necessity. And second, and this is a big one, companies are just getting fed up with juggling a dozen different security tools. They're ditching those old clunky systems and consolidating everything onto CrowdStrike's single Falcon platform. And this quote from the CEO, George Kurtz, really gets to the heart of their entire strategy. He talks about the difference between a one-time ELA, that's a big one-and-done enterprise license agreement, and their recurring flex model. You can see their whole philosophy right there. This isn't about landing one big sale, it's about building a continuous, growing relationship. And that model is what they call Falcon Flex. The strategy is honestly brilliant. You get a customer in the door with 1 or 2 core products. Then, since they're already on the platform, it's incredibly easy for them to just add more security modules whenever they need them. It's a classic land and expand strategy, and it's how they keep increasing the value of every single customer over time. And is it working? Yeah. Just look at these numbers. Almost half of their customers are now using 6 or more modules. A third are using 7 or more. This just proves that once customers are in the ecosystem, they keep adding more and more services. The platform is incredibly sticky, and for a subscription business, that's the holy grail. All right, so that's the growth story. Now let's move on, pop the hood, and take a look at the official financials. This is where things can get a little complex, but stick with me because it's absolutely crucial for understanding the company's real bottom line.
First up, total revenue. It jumped a solid 21% from last year, hitting $1.17 billion for the quarter. And here's the key part. A massive 94% of that comes directly from those powerful subscription services we've been talking about. That's the engine right there.
Now, before we get to profit, we've got to talk about something that might seem a little dry, but I promise it's critical. It's the difference between GAAP and non-GAAP accounting. You can think of them as 2 different lenses to view a company's profitability, and trust me, they can show you 2 very different pictures. And here we go, a perfect example of why this matters. It's literally a tale of 2 net incomes. According to the official accounting rules, GAAP, CrowdStrike actually posted a loss of more than $77 million. But if you look at the non-GAAP number, which many investors prefer, they had a record profit of $237 million. The huge difference comes from non-GAAP filtering out things like stock-based pay and those big one-time charges from the July 19 incident to give a clearer view of the core business's performance. So that's where they are now. But what about where they're going? For our final section, let's look at the road ahead, what the company is forecasting, balanced with the potential risks they've got to navigate. Well, it's no surprise the leadership team is sounding extremely confident. The CFO, Bert Podbear, is basically saying all their engines are firing. The flex model is working, their sales pipeline is packed, and demand for AI security is through the roof. Because of all that, they don't just expect to continue this growth, they actually think it's going to accelerate. And they're not just talking a big game, they're putting numbers on it. This is their official guidance to Wall Street for the upcoming quarter and the full year. As you can see, they're projecting some seriously powerful and continued revenue growth. But, it's not all smooth sailing. In their official filings, CrowdStrike has to outline the risks, and they're significant. They're still dealing with the fallout from that massive July 19 incident, the global IT outage that hit airlines and banks. Beyond that, they're facing intense competition. And as we just saw, achieving sustained official profitability is always a challenge. So when you put it all together, what do you have? It's a story of really strong growth and a powerful platform strategy, but it's balanced against some very real operational risks and just brutal competition. Which leaves us with one final thought. With their clear strategy and a ton of cash in the bank, will this big bet on platform consolidation be enough to make CrowdStrike the undisputed king of cybersecurity?